Hi, it's Lee, and welcome to the Tesla Economist. Alright, it's been a tough week as far as the stock price is concerned. We've lost about a fifth the stock price in just about 2 weeks. On top of that, we have a lot of people saying the stock is going to drop even more. It's easy when the stock is performing to hope for a dip so you can buy more, but when it actually happens, how easy is it to change your tune? When Tesla was trading above 300, a lot of investors were hoping for a dip to load up. Now we have the dip. Are their sentiments the same? It's never easy buying on the dip. But this isn't a video about trying to encourage you to buy the dip. I have no idea what your financial position is. You know Tesla, you know your strategy, and we can all talk about what we're doing in the comments. I did actually buy on the dip when it was 240 though. Anyway, I know it can be kind of tough when so much of your wealth is wiped out so quickly, but it's not as if it's gone forever. And most of us know that this is just the start of the company, and we want to see it through, which will take years. So this isn't necessarily a video to make you more bullish or buy that dip or say cliches like hodl, but more just a reflection on what is happening, portrayed as pragmatically as I possibly can. If investing was easy, everyone would do it. It's more than just finding a great company and having so much conviction in the company that you're willing to part with large proportions of your net worth in the hope that the valuation rises. Investing is a mental game as much as everything else. You're not meant to always buy at the bottom. In fact, it's near impossible. Once you invest, there's a very good chance that over the period of holding, you will in fact be down. You may even be down half your investment at stages. It happens. I've been down almost half that much of Tesla from when I bought in the past. Don't beat yourself up about it. You couldn't predict the future. But let's face the reality here. Tesla is an incredible company. We're seeing brand new Teslas everywhere we go. More brand new cars than any other car. And this is whilst Tesla are only selling one major model. And this one major model is what people are labeling as a luxury SUV. Not only that, despite it being a luxury SUV, it was still so popular, Tesla kept raising the prices to cope with demand and still selling every car they make. Alright, there are concerns that in a recession, people won't be able to afford a luxury SUV. If in China it starts at 316,000 yuan, but the BMW X3, in my opinion, the most equivalent ICE competitor, starts at 390,000 yuan, BMW is possibly a fair comparison to Tesla at the level of luxury you might expect. I mean, I would argue that you get a lot more from Model Y, but let's just say they're on par. The BMW starts at about 25% more than a Tesla. But of course, that doesn't even include the savings you get from going electric. According to Tesla, that's a further saving of 85,000 yuan, taking it down to 231,000 yuan equivalent, making the BMW close to 70% more expensive than the Model Y. Yet BMW still sell about twice as many vehicles a year than Tesla will this year. Granted, they do offer more varieties of model, but their biggest selling model is their even larger, more expensive SUV, the X5. And Tesla's market segment of electric vehicles still seems to be growing. In fact, even if overall car sales drop, we don't even know if EV sales will. They may remain solid. And it will just be ICE car sales that drop. In fact, the EV industry is likely to keep growing. And Europe still appears to have up to about 6 months backlog for Model Ys. So Tesla may not need to drop prices in those markets. However, cars in Europe are about to become a lot more profitable. Berlin is meant to ramp up to volume production early next year. This will mean Tesla can start to meet more of that demand they have there. However, they'll be able to do this without having to ship them from China and not having any import tariffs either. This will save a lot in cost, suddenly adding more to margin. It's also from a more state-of-the-art facility. However, it's not benefiting from the likes of the structural pack or 4680 cells, front and rear die castings yet. So I can't say if they are actually producing them at a lower cost in Berlin than China, as labour and energy will likely cost more in Germany. And okay, sure, you may be feeling a bit down right now, and possibly not just from the stock price dropping, but the actual future of the company. Here you were before thinking, Tesla is going to be the biggest company in the world, and possibly just in the next few years. Now you may just be hoping it's back to its all-time high by then. Some of your expectations and hopes may have been adjusted. You might suddenly be thinking that retirement is not around the corner as soon as you thought. It was all too good to be true. Why? Because Mr. Market is getting to you. His bipolar disorder is rubbing off on you. Just like that time when he got you super excited about Tesla and you bought some more stock when the price was over $1,000 pre-split. That's what he does. He is fickle. And what about all the other news you're hearing about Tesla or even Elon? Yes, Elon's buying Twitter. So what? How is that bad for Tesla? Okay, it means Elon isn't going to put billions and billions back into the stock, but how does it affect Tesla? Twitter is not a complicated company. It doesn't require that hard engineering. It won't take much of Elon's time. I mean, just a dozen good coders alone could run Twitter, then a server team and possibly some sort of spam department. It's not a complicated business, especially not compared to, say, rocket science or rocket engineering more so. Totally blown out of proportion. It's hard to deny that we are in some sort of recession right now, and if Tesla is a luxury brand, then maybe it will struggle to sell more. But Tesla wasn't intended to be a luxury brand. Sure, when they started the S and X, they were luxury and high-priced vehicles, but the Model 3 had a price target of $35,000. It was meant to be a mainstream brand. No, that was all just marketing to get us hyped. Elon was lying to us about making affordable Teslas for the masses, just like how he didn't deliver the $25,000 Tesla he promised from Battery Day either. Really? Well, did you know that just last year, you could still buy a Model 3 Standard Range Plus for just $38,000 before any savings, let alone fuel savings, and Tesla was still hitting 30% margins. Granted, that did include regulatory credits. That car is now $47,000. Oh, and Tesla moved over to LFP sales since then too, and saved money on costs, along with other various cost savings like removing the radar. Granted, there's also been some inflation since then, but Tesla have locked in their contracts, so probably they aren't feeling that much either. Tesla is not some luxury brand. They haven't tried to price themselves exclusively in the market. And this was back last year when the stock price has been much higher. Since then, we've seen just how popular their products are, that they had to raise prices. Now the market is crucifying Tesla for high prices. Anyway, it's one thing to increase prices, but another to drop them. If you drop them, it could delay buying, as consumers wait in the hope that the prices would drop. So Tesla don't want to give the impression that they will do that either. My point is that in a recession, Tesla can easily drop prices to a level that is still higher than they were last year. They've raised prices in China too, and have lots of room to move there. In fact, these Q3 earnings will be very telling, as we finally get some idea of just how high Tesla's margins have gotten since raising all these prices. I think this might surprise a few people. The thing is, Tesla dropping prices means that they're priced closer to the competition. It suddenly means that there are consumers who were considering an ICE car before, but can now potentially afford a Tesla. So Tesla will get through this. It's the competition who should be a lot more concerned. But we know it's Tesla and Elon headlines that get clicks, especially when things are looking bad for the company. People love to see them fail. So if Tesla did lower prices, then it's possibly not just the ICE competition in trouble, but also some of the lower cost EV companies too. Suddenly a Tesla becomes that much more affordable to many who may have only been able to afford a Chinese EV previously. And if the scenario we are playing here is that the demand for EVs is down, resulting in Tesla having to lower their prices, then demand for Chinese EVs might also be down too. However, they can't lower their prices. They don't have that pricing power. They just have to cut back in production if they don't have the demand, as they're already losing enough money as it is. And some people are even jumping ship, investing from Tesla to BYD. Now, just think how much our community knows about Tesla and all the information there is about the company. It's literally a full-time job just to stay up to date. Well, it's mine. So if you were a good Tesla investor, then how could you know close to as much as BYD? Last revenue breakdown, BYD reported they showed they had more revenue from cell phone handsets than they did EVs. I've tried to research that company as best I can, and there is a lack of information there. If I was to invest in any company, I want to be able to know as much about it as possible. We don't even know what gross margins they get on their BEVs. Would you feel comfortable going all in without that knowledge? Therefore, anyone who says they're jumping from investing in Tesla to BYD likely didn't follow Tesla enough or believe in the mission enough before anyway. And if they think they're investing in a profitable BEV company, then they have no idea what they're doing. Anyway, after this research, if prices drop back down to where they were about last year, then that's not that big a deal. The stock price was higher then too, before we knew how popular Teslas and EVs really were going to be. Tesla has gotten some costs down. If they're facing inflationary costs too, then so is everyone else, so it's all relative. Tesla isn't meant to be a luxury priced brand. They just had to push these prices because of demand. The macros can keep compressing those PE ratios, but Tesla's earnings should eventually break out. Of course, the main thing we're waiting on for that is a 4680 ramp, which is really what still matters the most right now. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.